We have been very, very fortunate that the think tank, which aims at research-based policy advice, had to shift to the online webinar when COVID was starting. We have been very fortunate. We have done nearly 220 webinars. And during this period, we have been also very fortunate to have a blend of foreign speakers and Indian speakers. We have also had the fortunate good luck to host 3 Nobel laureates. We've done for G20 a series on new international economic order. We were in the middle of 2 series. One is on women empowerment and the other on climate, but we couldn't complete it because we had so many other topics coming up. We will complete those series though. We are going to launch a series next time on states. So we are going to do 5 webinars on Punjab, which has suffered the severe most deterioration in the ranking. And then we are going to do 5 states which have really recorded high growth, like Tamil Nadu, Maharashtra, Karnataka, Gujarat, Haryana, for all of us to learn lessons from as to how a state should really do public policy. We are now very close to the union budget. The elections are over. The results are for all to see. The new parliament has already started its operations. So the new budget is on the anvil. And we are doing the pre-budget today, which means we at least have 3 to 4 weeks before the new budget is announced, so that the inputs that we provide today can reach the Ministry of Finance. That was the objective of doing the webinar on pre-budget today. To do this webinar, we requested Professor Bezbaruah to chair the session, and then we have across the country requested very select people to come and speak. As you would see, and I'll introduce, they come and they bring different specializations. Professor Bezbaruah himself is the professor and head department of economics, Guwahati University. He is also an expert with EGROW Foundation. He has also held several positions till date, like member of ICSSR from 2017 to 20, director in the board of Assam Power Distribution Company Limited, member of the RBI Committee on Financial Sector Plan for Northeast Region, chaired by the Deputy Governor Usha Thoret, director of the board of directors of the Assam Industrial Development Corporation, member of the advisory committee for preparation of Human Development Report Assam. He has 5 books, 50 papers in journals, 28 articles in edited volumes. Then we have Professor Rajeshwari UR. Professor Rajeshwari is working as Associate Professor in the Department of Economics, Christ University. She is a recipient of Nandan Nilekani Fellowship and RBI Scholarship. She is a member in the professional bodies like Karnataka Economic Association and Board of Studies base, which is the Ambedkar University in Bangalore. Her research interests lies in the area of public finance, and that's why we invited her today. Then we have Mr. Madan Sabnavis. Madan Sabnavis is a dear friend of mine. He is the chief economist at Bank of Baroda now. He is also a member of SEBI's CDAC and RSC committee and IBF's RSC committee and education committee. He has been chairman and co-chairman of committees of BCCI and IMC, has been a corporate economist since 1987, and has worked in the fields of development banking, commercial banking, engineering, and commodity markets and credit ratings. He has multiple interests in human behavior, politics, and social systems beside economics. In personal capacity, he has published very extensively, nearly 2,500 plus articles in financial publications since 1988 and is a published author of 4 books. One book is Economics of India, How to Fool All People for All Times, Hits and Misses, Indian Banking Story. Then we have Mr. Raman Agarwal, again a dear friend. He is the director of FIDC. He is currently working, I think he has more than 27 years of working experience in the NBFC sector. He is a member of advisory groups to Ministry of Finance and RBI, core group set up by Ministry of Corporate Affairs, and special task force at FICCI. He is the chairman of National Council on NBFCs and member managing committee at ASSOCHAM and the co-convener industry government interface. He has extensive experience with NBFCs, and that's why we invited him today. Then we have young Professor Saakshi Jha. She is assistant professor of economics at IIM Ranchi. Her teaching interest lies in macroeconomics, econometrics, and public policy. Her research mainly focuses on macroeconomics and monetary policy. She holds a doctoral degree in economics from the Department of Economic Sciences, Indian Institute of Technology, Kanpur. She is the recipient of Mulk Raj Gold Medal in her late Professor Mulk Raj Gold Medal in her undergraduate and has been awarded for outstanding PhD thesis. Ajit Pai is not here right now. He will be joining us soon. Ajit Pai is a financial sector expert. He has worked in Niti Aayog for many years and then at Ernst Young. Right now, he heads the policy at Ola and is traveling abroad, but despite his very tight schedule, he has agreed to be part of us. With this, let me hand over the session to Professor Bezbaruah to conduct the proceedings further. Professor.
Thank you, Dr. Saran Singh. And I must thank the EGROW Foundation for giving me this opportunity of sharing a very important session. And I thank and welcome everyone who has joined us for this particular program. And as you can see, we have a very packed panel of 5 very distinguished speakers, all from their respective fields of expertise and all that. So I shall not be taking, I can't afford to take many minutes for introducing the topic of the thing. I'll take bare minimum 2 to 3 minutes just to set the ball rolling. Then we'll go according to the order in which Dr. Singh has introduced the panelists. Now, this budget, which is going to come shortly, we can expect that in many ways it will be the continuation of the interim budget with the Board of Accounts, which our finance minister presented in the parliament on the 1st of February. That although it is called an interim budget, that was fairly detailed as far as expenditure proposals were concerned, particularly for an interim budget. It was fairly detailed, and here we found, here we noticed the continuation of the strategy which the NDA government has followed after the COVID, for recovery from COVID and taking the country forward. Basically, I can put it in 3 points. One is the continued sort of emphasis on public sector expenditure on capital goods, so capital expenditure particularly. So although the budget was supposed to be expanding at a 6%, capital expenditure would be raised by 11%. So that's still capital expenditure is spearheading the recovery and further growth of the economy. And basic theory is obviously clear. On the supply side, this increases our production capacity and efficiency of the production sector. And on the demand side, it actually leads to transfer of income and creation of employment through the multiplier process. So this is how we have been going on for last 3 years, and this is supposed to have worked well in giving us fairly good growth rate. And now, of late, it seems that even the manufacturing sector is now getting revived, and so on and so forth. And the two other planks of the strategy of the government has been, one is that the welfare schemes for those people who are in a way say poor and vulnerable, so benefits of development are are still fully not received, reach them, so they require some kind of support. So government has many welfare schemes for that. And thirdly, there are those capacity building schemes on which money has been invested, and this is absolutely necessary. We have to maximize our potential demographic dividends. So this has largely been the strategy. And now the election results has shown that more or less the idea has been has come back to power for the third time. So roughly it can be said that the public has endorsed this strategy more or less. However, so we can expect some amount of continuity of the same strategy in the forthcoming budget. However, we can notice two important points here. One is that one is very helpful for the government in the sense that the growth rate for 23-24, which was projected in the interim budget time, projected not exactly in the interim budget, it was projected in that review of Indian economy kind of okay, so that was 7.2%, but now last May a revised estimate has come, which is by which actually it should be 8.2%. That means substantially higher growth rate will be achieved in the 23-24. What is the implication for the current budget? This means that on the base of higher growth, we can expect that there is going to be higher amount of revenue generation in the so government may have more resources, so which it can utilize for maybe either breaching the fiscal deficit, or maybe expanding its expenditure program, or can be a combination of both. So this is something which will be very helpful for the government to frame the new budget. The other thing I would like to point out is that yes, government has won a majority, but then election results are, if you look at the details of the election results, there are many political nuances in it. Some areas where they have earlier didn't have much, they have won seats. Some areas where they had stronghold, they have lost seats. So there are political and economic messages out there. So government may like to actually, respond to this particular political message that has been, conveyed in the elections. So these are some of the opportunities the government gives for what you call, to sort of, moderate the budget proposal for the 24-25, which will be coming up very shortly. And secondly, in that being the interim budget, there was not many proposal regarding the direct taxes, though there were indicators, but then specific proposals. Now the government may, if it wants to take forward the reforms of the direct taxes, it can probably take that forward. So these are my initial comments. So there are some certain things to be expected from this particular budget. And since we have 5 panelists now, and we have about, I believe, 75 minutes or something. Okay, and if we want to leave 10 minutes for discussion, so we'll be left with 65 minutes. So roughly each panelist, can get about 13 minutes. So I'll request our panelists to confine their presentations to 12 to 13 minutes, so that we can have some kind of discussion at the end of it. And so I'll follow the order in which Dr. Singh has introduced the guest. So let me have Rajeshwari, Dr. Rajeshwari, kindly, make your presentation.
Hello, good afternoon, everyone. I hope I'm audible to everyone.
You are.
Yes. Okay. All right. So good Good afternoon, everyone. I thank EGROW Foundation and as well as Professor Charan Singh, sir, for inviting me to be part of this discussion. Because for any economics teacher in that matter, I mean, it is very important, like, to participate and also to know others' point of view, especially when it is, about the budget. So I would like to thank once again, sir, for giving me this opportunity. So, as the new government unveils its first budget, high anticipation hangs in the air. Basically, as already sir said, that tax expectation and then capital expenditure, and as well as another very important point which everybody is talking about, especially economists, that is about low consumption expenditure, especially in rural areas. So I am not touching these three aspects. In fact, I would like to touch four important sectors where my interest lies, or where I am, expecting certain type of changes, or at least some, changes in the allocations and the expenditure. So I would be focusing, or I would be limiting myself to some 3-4 sectors, especially education, health, women, and rural spending. So before I start with, as all of us, we know that after the election, this is the first budget. So in my opinion, economic growth and fiscal consolidation are expected to be central theme of the upcoming budget. Because with the our honorable Prime Minister Modi ji's government entering its third term, there might be emphasis on balancing populist spending with rigorous economic reforms. So I believe that this budget, upcoming budget, is likely to focus on stimulating economic growth through increased investment in infrastructure, maybe promoting digital economy initiatives, and enhancing the ease of doing business, and also concurrently measures to control the fiscal deficit and public debt is also very important for ensuring any sustainable economic health. So basically, in my opinion, there would be like economic growth and fiscal consolidations are expected to be central theme of this upcoming budget. So now, when I'm confining myself to 3-4 important sectors, let's start with the education sector, because education sector, as all of us we know, that always the allocation for education sector is compromised, because there is always a balance, balancing demand from the other sectors, like maybe health sector, infrastructure, defense, social welfare, where always or often it leaves education sector underfunded. So if we look at, or if we take a recap of 23-24 budget, in the 23-24 budget, Ministry of Education received substantial allocation, reflecting a 13% increase over last time period. Let's say, for example, a lot of schemes which has got our attention, like Samagra Shiksha Abhiyana, which includes all major policies and programs. Similarly, the budget 23-24 budget also focused on teachers recruitment, with the plans of hiring over 38,000 teachers for Ekalavya schools. And very interesting part of 23-24 budget, especially with respect to education sector, that was research and development. So where it proposed the introduction of dedicated research programs, and as well as establishment of new research centers. So that continued in the interim budget also. Like when we look at interim budget for financial year 24-25, where we can see 19.65% increase for Department of School Education Literacy, and something around 8% in the budget allocation of Department of Higher Education, with respect to the interim budget. However, we can see that it does not translate, or all these expenditure, it translates only to 4.6% of the overall GDP. So which is far below than the 6% where various committees has recommended. that the education, expenditure should be 6%. Let's say, for example, Kothari Commission report, and even the new education policy says that it should be 6%. So though there is an increase of 19.65% for primary education and 8% for higher education, still we are able to translate only 4.6% of the GDP. So I think this is again, like from years we are talking about, like we have to increase the expenditure on education, because that would be converted into human development. I mean, overall human development, because it is also a part of our human development index. So I think this is one of the concern, or this is one of the point which we like the budget has to take care of. Apart from this, I also see that there is a major issue with the utilization of the fund. Allocation is one side, and the utilization of the fund is on the other side. For example, in 23-24, the government planned to spend 1.16 lakh crores on the education, but ended up with spending 1.08 lakh crores. So which means that whatever the allocation has been made, the government was not, not able to, utilize those fund, properly. So I think we need some mechanism where the government also should make sure that budget is well spent. That is my second, concern. And the third one, which I wanted to talk about, that is distribution of the resources. I think India demands an urgent need for high spending and as well as proper distribution of the resources. Let's say, for example, in 2022, that is financial year 2022, over 200 million students, they were enrolled in Indian schools, okay, with 74% of elementary schools. And surprisingly, in 2021, 7.7% of India's population faced multidimensional poverty, especially lacking access to schooling. So when we say that, or despite of increase in the allocation to education sector, access to quality education for these 7.7% deprived population still remains a challenge. I think this upcoming budget can have something to address this particular issue, where we can think of distribution of the resources equally. And apart from that, as the Indian government prepares to unveil its upcoming budget, there is a lot of opportunity to revolutionize the educational landscape by integrating emerging technologies, such as maybe artificial intelligence, because artificial intelligence nowadays, we can see application of artificial intelligence even in the teaching field or in the education field. So I think it has a lot of opportunity to revolutionize the educational landscape by integrating emerging technologies such as artificial intelligence and as well as virtual reality labs, because these investment on these things would be able to convert, or would be able to contribute to the human development and as well as human capital. So many economists have emphasized the need for a substantial budget allocation towards digital infrastructure, teacher training especially, and the development of AI powered educational tools, because investment in these things will be enhancing learning environments and which can significantly contribute to the STEM education and as well as boost the student engagement. So these are the 3-4 important points which I would like to say about education sector. Quickly, let me consider the next sector which I want to talk about, that is women. So the Indian government has already prioritized women's well-being, which you can see, which you can also see it in the interim budget. It also aligns with the G20 India Presidency Delhi Declaration, which happened in September 2023, aiming for a 30% increase in the gender budgeting. So there are a lot of initiatives has been taken, especially with respect to increase in the funding, economic empowerment of women, and as well as entrepreneurship. let's say, for example, we can see a lot of a significant allocation for programs like Saksham Anganwadi and Poshan 2.0, and as well as maybe Deen Dayal Antyodaya Yojana, Mudra Yojana, and Lakpati Didi, which was introduced in the last budget. But even after all these key initiatives, India has had low female participation in the workforce, with only 37% of women in formal employment in 2023. So which also basically means that the government has to invest in especially women's enrollment in higher education, because as the data shows, only 37% of the women are the part of formal employment. So it is important to increase the women's enrollment in higher education, as well as STEM courses, that is science, technology, engineering and maths courses, which will be helping us to create human capital in India. And with respect to health, especially another very important sector, which where always we say that allocation and expenditure are low. That is, if we look at the 23-24 budget, it was 2.6% increase, I mean, in the interim budget for the health expenditure. That is with respect to budget estimate, whereas 14.2% increase in the revised estimate. So though there is a increase in the health expenditure and health allocation, still some of our health indicators, when we are comparing it to our neighboring states or developed states, so it is, I mean, still, we are lagging behind. So I think even 15th Finance Commission report, focused on health indicators and the expenditure on the health. So I think health should be one of the, again, priorities, in this budget. And even in the interim budget, in that way, if we look at, we could see there is some increase, I mean, incremental increase in the health allocation, and the major announcement, and also very interesting part of the budget, especially with respect to health budget, was extending coverage of this insurance for the Anganwadi and as well as ASHA workers. So I myself, I had conducted one, major research project.
Madam,
about
please
these,
skip the details. We are already,
uh-huh.
you have already
Yes, sir.
overshot your
Yes,
time.
sir.
Yeah.
So
Skip the
basically,
details and come to
yeah. So
okay.
basically, the another point is coverage of ASHA workers, because it is I mean, the coverage of ASHA workers, I mean, it is pending from a very long time, and as well as like, though there is an announcement, but it is not reflected in the budget. So I would be expecting that there would be something specifically on this point. And then the last point, that is push in rural spending. As all of us we know, like consumption expenditure, especially in rural India, it has come down. I mean, when we look at the pattern, wealthier individuals are spending more, whereas rural consumption remains low. So which also indicates that the pandemic, which hit vulnerable groups, hard, they are not regained their purchasing power. So what is my suggestion, or my this thing would be, this budget should address this disparity, and the government might be likely to boost spending in rural areas. It might increase the investment in on rural infrastructure, agriculture, and social welfare programs. So these are the main points which I wanted to bring in the discussion. So with that, I'm concluding.
Thank you, madam, for flagging.
Thank
very,
you so
very
much for
important.
the opportunity.
Thank you for flagging so many very, very important issues. But
Thank you.
since Karan Singh has a whole panel with so many great speakers, so we have to give time to everybody. And I'll request the next speakers to cut down that thank you giving nice part, just come to the point directly. So may I now request Dr. Madan Sabnavis to kindly make his presentation.
Yeah, thanks a lot, and good afternoon to everyone. Hey. Yeah, good afternoon to everyone. I hope I'm audible.
Yes.
Okay, first just to put certain hygiene in place, I'm not Dr. Madan Sabnavis. I'm a plain postgraduate in economics. So I wouldn't claim to be a doctorate. Okay, now when we're looking at the budget, I think there are two things which we need to keep in mind. I think the first thing is that this is an interim budget, which means, sorry, this is the final budget. We had an interim budget earlier. And past experience shows that normally whatever is there in the interim budget doesn't change too much when we have the main budget. So if we had an overall outlay of around 47 lakh crores in the interim budget, that number is not likely to change significantly. There would be some bit of tweaking going in certain areas of income as well as expenditure, but I don't think anything is going to change substantially. Second part we should keep in mind is that while all of us have lots of expectations on the budget, we should remember that the budget is an income and expenditure statement of the government. There are certain policies which are implemented by the government which are generally outside the budget. So therefore, we have to be a bit rational in terms of expectations of what's happening. I think there's somebody whose mic is on. If everybody could go mute, I think that would be nice. Okay, because I can hear some other sounds coming. Okay, now when we're talking of the budget, I would say there are three parts which I would like to put forward. One is that there are three major problems which we have today in the economy. One is that consumption is not growing. B, savings may not be growing. Third, private sector investment is not taking off. So can the budget do anything to address these three issues? To my mind, yes, in a marginal way, it can be done. As I said in the beginning, it's not a panacea for all these problems. Where life would be very easy and all countries would be very prosperous if budgets can turn around the country. So we should keep that in mind. Now, what can be done in order to increase consumption and savings? Now, if you look at the overall income tax structure, we have something called the old tax structure and we have something called the new tax structure. The old tax structure is something which gives benefits in terms of if you save in certain instruments under Section 80C, or you do something in terms of buying a house, you get a 2 lakh interest, which is tax exempt. So if I want to really increase savings of individuals, the only way I can do it is to give certain extra space in this particular region. So if an individual is going in for the old tax structure, you can say that they are more savings oriented. So if you're able to increase ATC from 1.5 to 3 lakhs, make it substantial, otherwise it will not really work. Interest on housing, given the fact that inflation is up, cost of living has gone up, cost of dwellings have gone up, your quantum of loan has gone up. I think 2 lakhs is a bit on the lower side. If you double it to 4 lakhs, I think that's one way in which we'll be able to increase savings. How about consumption? Now, let's assume that I'm an individual who doesn't go in for the old tax scheme, but I go in for the new tax scheme. Where basically, I'm in the higher income group. I don't really bother much about savings, but I want to spend more. I want to have more real purchasing power. So if I want to do this, what do I do is that we need to take a fresh look at all our income tax slabs. So what happens in India is that we have income tax which are fixed, and after that, nothing changes until we decide to change these slabs, maybe after 4, 5, 6 years. So there has to be an automatic process by which we are indexing all these slabs with inflation. So that if I have 5% inflation every year, so over a period of say 5 years, automatically my exemption level from 3 lakhs goes up by 5% first year, another cumulative 10% second year, so on and so forth, so that there is some protection which is offered. And the government can also consider tweaking the rates. Today, I think above 15 lakhs, you pay 30%, maybe I make it 20 lakhs. So if the government is keen to push consumption and savings through the budget, I think these are the two ideas which should sound appealing. Now, how about investment? Now, when you're talking of investment, so far what the government has been doing is you lowered the corporate tax rate in 2019. But did this lead to higher investment? The answer is no. Because companies don't invest unless they see demand, unless they see a good return on capital, because finally, at the end of the day, I'm answerable to the shareholder. So what the government did was that you had this PLI scheme which said that you perform and then I'll give you an incentive. So broadly speaking, you said that over 5 years, I have a 2 lakh crore of allocation under PLI. In case you're able to invest a certain amount and generate a certain amount of incremental output, you could get a return of between 4 to 6%, which is approximately 5% if we take the median part. Now, has the scheme worked? The answer is definitely no. It has worked only to a certain extent. If you look at the mobile industry, the components that too. But if you look at other industries, it has not really quite worked. A number of companies have actually made applications. A lot of noise was made on that. But if you look at the data from the budget over the last 4 budgets and see where exactly has the government really spent the money, they have not spent more than around 15,000 crores in a period of 4 years. So having such a scheme gives you an idea that can we address the same thing at the MSME level. Okay, because the MSMEs account for a large part of our exports, 40% of exports, maybe 25% of our IIP, large employers. So if I'm able to bring in some kind of a PLI scheme for MSMEs, where I say that I don't have to give 2 lakh crores. Our calculations show that maybe 2 to 3,000 crores allocation in the current budget is something which can be absorbed and it can also be effective. And you lay down clearly the parameters which have to be met for an MSME to qualify for it. I think that will be a good way in increasing overall investment and also have the backward linkages with employment. The second aspect which we need to look at is that as economists, we are all concerned about the fiscal deficit ratio. So today we are at 5.1%, and we have targeting 4.5% in the next year. So which means that in these remaining 8 months, are we going to stick to 5.1%, or is there scope to reduce it further? Now, a month back or so, the Reserve Bank of India transferred its surpluses of 2.1 lakh crores to the government. If you look at the budget document in the interim budget, it has spoken of something like 1 lakh crores for public sector banks as well as the Reserve Bank of India. So quite clearly, we've gotten an additional 1 lakh crores. So the government has a choice about whether you use it to reduce the deficit. I can use it to spend on capital expenditure. I can use it for social welfare. That's actually a prerogative of the government. So I don't really have any suggestion as such, because I think 5.1% is a good enough number. And quite given the fact that the economy is doing fairly well, they're expecting growth of 7.3, 7.4% this year. And in the GDP deflator of another 4.5, 5%, we could be probably close to that 11% number of nominal growth in GDP. I think the targets on revenue will also be met. We have seen enough buoyancy in the first couple of months. So I would say that what I'm keen to observe is whether the government will use this 1 lakh crores to lower the deficit, or you'll use it for any slippages which could take place, probably on disinvestment, or whether you would like to increase any other component like, say, capital expenditure. This actually brings to the last part of my discussion, where I'd like to place that there are 2 things which we're looking at. One is in terms of capex, and the other one is social welfare. I think social welfare is very much important in a country like India. I think as long as the government says that 800 million people are being given free food, it means that notwithstanding all the other surveys and reports which say that poverty has come down, if I'm still giving 800 million people free food, I think there's a large part of deprived society which needs to be supported by the government. So I think when there is enough space which is there in the budget, the government should continue with PM Kisan, the REGA, because again, you're not quite sure the monsoon is going to behave this time. So I think social welfare is something which will continue in the normal way. And last is on capex. Now, capex, we should remember that the finance minister during the interim budget also mentioned very clearly, and I think that's a very pragmatic statement, saying that don't expect us to increase capital expenditure by 20%, 25% every year. So we have 11.11 lakh crores, and I think that amount is probably good enough to be retained for the full year too. We should remember that while we keep harping a lot on capital expenditure, which is very good, but the private sector has to invest. That's the only time when the economy will actually see higher capital formation. The government can do only a certain amount. We should remember that out of 100 lakh crores of investment taking place in the economy, the government, the central government, is contributing to 11.1 lakh crores, which means that it's just around 10, 12% which is coming from the center. The rest has to come from the private sector. And as usual, I would say there's no quick fix for it. This is something which grows very, very in a gradual manner. There are other economic factors which really come to the picture. The other last issue which I had on this capex is we should remember that the absorptive capacity of the government should also be looked at, because we often see that even state governments target a lot on capital expenditure. Finally, they cut back on the capex to meet their fiscal targets. There's always this issue when we talk to finance secretaries of various states. The impression we get is that, okay, we announce so much on railways, roads, but there is a limit to which the government can also implement the projects. So there's one thing to say I have the money to spend. The second part is, can I actually implement whatever I want to do? So I think given this kind of constraints which are there, I think if the government sticks to 11.11, maybe go up to 11.5, and nothing more than that, should be good enough to keep the economy going at this region of 7.3, 7.4%. Thank you.
So you're on mute. You're on mute.
So, thank you very much for a very interesting presentation, and your point regarding, reforming the PLI system, targeting it for MSME, I think is very, very important. The government should take note of. So, without wasting any further time, let me go to Raman Agarwal.
Thank you. Namaste, sir. Thank you, EGROW and Professor Charan Singh for having me. So since I represent the NBFC sector, let me present. The latest RBI reports and data show that NBFC sector credit to GDP has grown to about 13%. NBFCs today account for 20% of the banking assets, and NBFCs lending to MSMEs has grown 3 times more than that of banks. And a very recent SBI report has said that NBFC sector in India now is the 3rd largest in the world after US and UK. Now, why I quoted these important landmarks is because just to highlight the point that as a financial intermediary, as the sector grows and caters to the credit needs of what we call the underbanked or the unbanked segment of the society, the need for funding, for our funding, is of prime importance. And if we would know that lately RBI has voiced concerns that NBFCs are over dependent on banks for funding. Now, this is something which we as an industry body have ourselves been voicing, that why should we be made over dependent on banks? So the request here is to the government, and if they can make some specific allocation of funds to the financial institutions like SIDBI, who can then play the role of a refinance institution to NBFCs. Now, on this front, we've had discussions, and SIDBI management is more than ready to do this role, because anyway, SIDBI is funding NBFCs out of their own funds now, as of now. If a specific allocation is done from the government side, it will be a win-win situation. NBFCs will get funds that will ultimately lead to enhanced credit delivery, and the over dependence on banks will also be taken care of. That's point number 1. Point number 2, RBI has harmonized the regulatory framework of NBFCs with that for banks and other financial institutions. Now, while the regulations have been harmonized, the so-called harmonization exercise remains incomplete, because if I may use the word, certain benefits or tools which are available to banks are still not available to NBFCs. So, for example, while the prudential norms of NBFCs are at par with banks, but when it comes to recovery, NBFCs cannot invoke security under the SARFAESI Act unless the loan ticket size is minimum 20 lakhs, whereas it is for banks, it is just 1 lakh. Now, NBFCs, we know, are all giving small ticket loans, so it is imperative to remove this arbitrary kind of a rider which has been put to ensure that we are able to enforce security under SARFAESI and do recoveries. On the taxation side, every non-individual borrower borrowing today from NBFCs has to deduct TDS of 10% on every EMI he repays. Now, this, more than anything else, has become an operational nightmare. We can expect for large NBFCs, say the Mahindras and the Tatas of the world, where you have lakhs of borrowers, every borrower, every EMI is deducting TDS. And it is creating a huge ruckus, to an extent that we are not getting credit. Banks have been exempted, financial institutions have been exempted, even housing finance companies have been exempted. So why not NBFC? And there is no revenue loss here, absolutely not, because the technology using 26AS and various other means, there is no way there can be any revenue leakage here. So that's point number 2. The third point, point number 4 rather, first was funding, second SARFAESI, next TDS. The fourth point, of late, we all know this beautiful model of co-lending which RBI had come out between banks and NBFCs. Now, of late, the department has started demanding GST on co-lending. So what they're saying here is that, let me explain, that in co-lending, since 80% is pooled by banks, contributed by banks, 20% is contributed by NBFCs, and the customer is offered a blended rate, it is the NBFCs who does the front ending. So NBFCs source the customer, NBFCs do the collections. So GST department says you guys are providing service to the bank, which is actually not correct. So as a result, they are demanding that whatever interest rate differential is there between bank and NBFC, they are demanding GST on the entire interest rate differential. If this is to be implemented, the entire GST model will become unviable. So I think this needs to be corrected and ensure that there is no GST, because there is per se no element of service here which NBFCs are providing. It is a joint lending done by banks and joint risk sharing in the ratio of 80 to 20. My last and final point relates to a very important amendment which government had made 2 years back following our presentation, was the amendment done to the Factoring Regulation Act. Now, factoring, we all know, is a very important tool for not only funding but ensuring timely payment to the MSME sector. Now, in order to be doing factoring and register on the TREDS platform, the Act requires that NBFCs have to register as NBFC factor with RBI. Now, the Act was amended to ensure that all NBFCs can do factoring. However, we still need to apply to RBI to register ourselves as NBFC factor. This is in addition to the registration of NBFC per se. So today, two registrations are required. NBFC registration as an NBFC with RBI, and then registration as an NBFC factor with RBI. So this dual registration, to our view, is merely an operational hazard. It is not serving any additional purpose, since now all NBFCs are allowed. So the certificate registration of NBFC should be taken as also registration as NBFC factor. If this is done, factoring will take off in a very big way through the electronic TREDS platform, and it will hugely benefit timely payment for MSME sector. So these are my limited points. Thank you.
Thank you very much. And actually, you have brought into the table some of the very important aspects which are, I think, constraining the operation of NBFCs, which actually has a very important role to play if a convergence between the formal, organized and the unorganized sector of the economy, or formal and informal sector of the economy, is to be achieved. So these are, as you speak, these are seems to be completely doable, but then nuances need to be discussed. I hope somebody is listening from the government side also, and do address these particular issues. Thank you very much. So, and thank you also additionally for saving a lot of our time. Can I now come to Saakshi, Dr. Saakshi Jha?
Thank you. Shall I start?
Yeah, please. Yeah, please.
I'm getting muted actually. I hope I'm audible now.
Yes, you are.
So the most important element that I find that the budget could actually focus here is the fact that now the Indian economy, the growth story of Indian economy has to be more diversified. Like the growth channels that were being followed by, say, 90s or 2000 should be now updated. Like if we talk as of now, the growth that India is facing, and I believe this to be a challenge in that respect, is a jobless growth. I mean, if we look, there are young scholars, young age group people who are still unemployed. So in this respect, I guess this budget should mainly focus on, say, how to develop more job, or how to incentivize, say, manufacturing sector, say MSME, or maybe the tourism sector. Now, the tourism sector is one of the important sector that has remained quite untouched and undiscussed by the government, whether it be a state government or the central government. If I have to read out some data for the tourism sector, it shows that the share of tourism within economy for generating employment has been, say, 0.9%, whereas if we look at the global World Economic Forum ranking for India on the tourism sector, it just holds 39th position. So this is a time when the government can think how to further incentivize this sector. The periodic labor force survey of 2023 shows that alone tourism sector, the share of employment that it had generated in the year 22-23 was 5.5%. So I believe this budget, we could have some incentives which could further accelerate this sector and provide the required job opportunities for the youth and for the masses that are remain unemployed here. Secondly, as already stated by one of my panelists, is about the savings, the household savings. As we know, the recent data that has been published by RBI states that the household savings has been reduced. Now, this is a concern because if the savings are reducing, overall, we know that it may not lead to the consumption, which may be also impacting the investment. And as the government focus is towards capital expenditure, this particular channel of household behavior is what that there has to be concerned. So, like stated, I mean, the tax policies are the one of the solution that already given and is very well said by my panelist here. What more I can believe could be done is that, say, suppose, providing some national savings scheme, or say channelizing the post office savings schemes, which may induce or may let people to go into the saving channels there. Thirdly, again, the rural demand, the rural consumption. If we look at the wage rate, the rural wage rate, it has been decreasing. The rural inflation has been decreasing. And as FMCG, the main concern from FMCG is that the selling or the consumption of FMCG produced goods have reduced in rural economy. So again, this is a concern, and this has to be taken into budget. How could the rural economy, which is almost facing the backlash, like it does not shows the growing. Like I said, that it's a time that India has to think about the channels of growth into different aspect. It no more can think into or repeat the same growth trajectory path that it has been following previously. So given these data that are coming up, the rural economy, the urban economy, the gap that is widening up has to be also taken care. And I believe in this budget, we could see some numbers coming out for that. The last here, I would like to talk about the health sector and the insurance. When the fact that says that around, say, 70 to 75% of Indian population is still not insured. So this is a big, given that we have a huge medical inflation, and if I read the data, it says around 14% is the medical inflation that the normal households in India suffer. So given that it's a basic need, it's a necessary need, I believe the government should either waive off the GST from the insurance, or say provide some schemes, some incentives for senior citizens. I look forward if certain things in the budget has been announced as such. Interestingly, the last, and to conclude my observation and discussion here, I would like to see here that this budget should focus on development and demographic dividend. It should be, if you look at the data, if you look at the content, there's a very high chances of increasing income inequality, because the way the sectors like real sectors, the construction sectors are booming, vis-a-vis the rural economy is going in a downward direction. So this shows there's a gap, and there's very high chances if these gaps are not, or the budget do not entertain these gaps now, this will widen up to a huge extent. So it's very important that with demographic, with the age and the young people that are getting unemployed, it's very important that the development that takes place do take into consideration how the age group and how the demand is evolving in the economy. So this is all, I hope, and thank you so much for giving me this opportunity.
Again, you have raised some very, very interesting issues, focusing on certain things. Incentive for better coverage and penetration of insurance, for instance. Then you are also, like another speaker, you'd like, whole incentive schemes to some extent come in for incentivizing savings. Your point is inequality and all that. I'd like to take up later on in my fine. When I sum it up. So do we have Mr. Ajit Pai joining us?
Yes, I'm with you already.
Okay. Sir, it's your turn to speak now.
So thank you to the chair and to EGROW Foundation, Dr. Charan Singh, etc. Having listened to a lot of the topics that have been touched upon by other speakers, I thought I would focus only on, two very interesting areas to me that I hope you share my concerns on. Before I begin on those two topics, I'd like to say that I, sort of support what other speakers have said, that this final budget is a continuation of an interim budget. Generally, with a very limited part of the year that's left over, the government isn't going to be not likely to be, hugely different in its path, from what has already been set in the past. So we can expect a lot of continuity in this budget. But that given and that said, we also have a lot that can happen in this period, what is remaining of this fiscal year, with this budget. And those two areas, one of them I'd like to focus on is what's falling between the cracks between the Finance Commission, the union budget, the regular sort of budget, and what I would call the FRBM, the Financial, Responsible Bill that went through. And one sort of area which I think that we need to spend some time on as a federal democracy, as a nation, is the fact that despite the FRBM, we are seeing a growing gap. In the short run, it was okay when you had something like the pandemic to go into stimulative sort of situation and increase our fiscal deficit. But there are other aspects that perhaps are less desirable about the way that debt overall general government debt has risen. And now I'm trying to draw attention not to the central government, which is a different question where people talk about the stimulation, etc., but what has happened in debt to GDP of the state governments. So the FRBM talks about 20% state debt to GDP overall, and there are many states that are running at above 40%. So what is the corrective action? What is the moral hazard? What has happened at the state level? When we look a little deeper across our states, what we find is that it's actually lack of any discipline and controls. And of course, the political pressures of spending as much as possible during one, political term. But the checks and balances over there have, not been created. And the RBI itself, there is a slight difference in the state debt, what they call the STL, which is the state debt between the interest rates, but it's not correlated, or it's not, at least, let's say, proportionate to the indiscipline in the amount of borrowing of the state. So you can see the amount of debt for Punjab, for example, is substantially above what it should be. And for other states, it might be more conservative. But the spread by the RBI that's provided for these STLs is almost nominal. It's not even, so there is a moral hazard for indisciplined states to borrow more. And to get some of these longer term things in check, when the country's economy is doing very well, the growth is growing, very well, are things that we should pay attention to, because the Finance Commission can provide some rewards. We can have, the federal budget be generous, and we can allow fiscal deficits. But this is the time in which we should get our housekeeping from a longer term perspective in order, and get the state finances finally, back on track. The Finance Commission does focus on some things that can help that happen, which is, you do have the 73rd and 74th Amendments, the devolution, start making the financials slightly stronger at both the PRI and the ULB level. And that can continue to happen, and, those kind of things. But at the core level, whether we should start correlating the amount of debt to GSTP of each state and increasing that cost of capital is something that the central government should start spending quality time with the RBI on, and the other constitutional bodies on, in getting into slightly better shape. So that was one theme. I think that in an interim budget, when we don't have the distractions of big change, that I'm hoping that this government can focus on how to correct for that. The second area that I wanted to touch upon is something that multiple speakers, including the chair, have just touched upon, which has been that the past 3-4 years has been driven by government capital expenditure. So while I completely agree that that has been the case in the past, I think that at this stage, especially, it's no longer and should not be necessary, because while there is a huge infrastructure gap, and as has rightly been pointed out, the private sector capital expenditure has not started accelerating private investment. A lot of it is because it's been crowded out by the government participating. So I think at this stage, we should actually start revisiting things that have not worked very well in India in the past because of a lack of capacity. That would include what I would call PPP, public-private partnership. It is even in public projects to start getting private capital in, start focusing the government more on VGF, which is viability gap funding, and other instruments, but try and get now the overall capex, start crowding in private capital rather than crowding it out. The railways, instead of developing everything EPC, should be looking at PPP more actively. We need to start getting public expenditure down, but overall capital expenditure up. And I think the recognition of that, the scalability of private investment in both for private capital as well as in public projects, and in private projects, both. We want that money to come from the private sector. So that is a very, very important element in bringing down overall cost of capital. And I think the government should start shifting its focus from that direct, when there was huge risk, when we were post-COVID, when private sector didn't want to spend. At that point of time, it was okay for the government, in fact, necessary, I would say, for the government to step in and stimulate. But it is time now for the government to start thinking of making this transition, trying to accelerate capital expenditure. I don't think we are ready to start making the big move to consumption and regular consumption. But that capital expenditure should be driven by the government, and should be driven by the private sector. The majority of that should shift to the private sector. The other element over there is that capacity utilization of private industry has been climbing. We are now reaching a point which is very close to a cusp. Once you're in the mid 70s, you're approaching a point at which at 80% you start the new private capital expenditure cycle. It's been delayed by almost a decade because of various issues with the Indian economy. And as we are approaching that with the steady growth that we've had, my view is that within the next 18 months, a private capital expenditure cycle will kick in, as long as we are doing all the other enablers, the trade enablers, the public infrastructure enablers, all of those, continue at a steady clip. And then when a private investment cycle, starts accelerating, the consumption will automatically follow. So those are the two sort of big points I wanted to make. One is on the state debt to GDP, an opportunity to start improving what the norms over there should be, so that the spirit, not just the word, but the spirit of the FRBM, the spirit of the Finance Commission's goals, the spirit of our constitution is better respected, and we start improving, we start matching the indiscipline with the cost of capital borrowing much more, and have to involve the RBI, which is the one that is the most active in actually providing this financing. And the second is, it is time for the capital expenditure not to slow down. It should continue to accelerate, but get driven by the private sector rather than the government. And the government, rather than doing directly, should use other instruments to provide to close the viability gaps that exist and start accelerating private investment. I will stop with those 2 points. Thank you so much.
Thank you very much. Both your points come as two breaths of fresh air. First of all, it's high time that we actually go back to the normal economic activities. Again, being focused on our fiscal deficit and so on and so forth, and the state's borrowing need to be, sort of reined in and all. And you mentioned the moral hazard there. Actually, one form in which the moral hazard surfaces is that some state governments, trying to some extent inflate even the GSDP figures so as to be able to borrow more and all that. So this is something which I think even Finance Commission probably can look into, and of course, yes, probably like you say, capital expenditure should continue, not only by the government but also private sector should come in, and their capacity, as you are saying, is predicting is almost near in full utilization. So we can expect some private investment coming in the years. But then if government takes away most of the resources. All right, they can be crowding up. If I have not distorted your ideas, I think this is very interestingly you have said. And all the credit goes to all the speakers for saving a lot of time. Actually, we are now left with about 20 minutes for discussion. So anyone who wants to raise an issue can raise. Please unmute yourself and please speak out. And if you have a specific question, please address to one of the panelists. I'll request the panelists to stay back so that you can address the concerns of the participants. Yes, the house is the floor is you can say the screen is open to everybody.
Hello.
Yes.
I am S.C. Agarwal.
Yeah.
I am working for the development of my native village. Invisibly and without publicity.
Now, where is your native village?
It is in district Faridabad.
Okay, Haryana. All right,
Haryana.
please go ahead.
I am facing some problems about maintenance of goshalas in my village. So I want that the wages paid to go-sevaks who are working in the goshalas, that should be paid not by that should be paid out of Manrega fund, because Manrega fund is meant for unskilled workers. So those who are working in the goshalas, they should be given wages should be given from the Manrega funds. This is my first point. Second point is that the major expenses of the goshalas is on account of electricity. So I want that a grant of rupees 5 lakhs should be given by the Ministry of Rural Development or Ministry of Animal Husbandry to the goshalas instead. And third one is that every this under the PM Surya Ghar Yojana, house owners are being given solar loan of rupees 2 lakhs to install 3 kilowatt solar system, but there is no solar scheme for shopkeepers in the village.
Yes,
Shopkeepers in the so I will request EGROW to persuade the finance minister or SBI, CMD SBI, to launch such a scheme for shopkeepers also. This will make my village a solar village to some extent, and the production of the solar energy will be more than the consumption, currently 2 megawatt.
Okay, thank you very much. Particularly your point regarding the solar, which need not be just confined to the households, but whatever grant is available, it should be available to traders, shopkeepers also. It's a very good point. I think since India is trying to go as green as possible, I think this is a suggestion which I don't know if EGROW Foundation has a way of forwarding it. This can be actually really forwarded. Regarding NREGA, use of NREGA, I have a little doubt, because NREGA is basically for if you are unable to get work, it's not supposed to be so I am not very sure, but I think you can take it up with the local panchayats and all who are in the helm of affairs. Thank you very much. Do you have any more?
Sir, one more that I want that the debt-free companies or enterprises should be taxed at the rate of 20% instead of because there is no incentive for them to become debt-free. So I want that. So debt-free enterprises means where there is no interest paid or payable in the profit and loss account.
All right. So something like a minimum alternate tax or something which was introduced at some point of time. Do we have any more interventions?
Just a moment. Let me see, because I have written it in my.
I'd like also have to accommodate other speakers. Thank you very much for.
Oh yeah, no problem, sir. No problem, sir. Thank you so much.
Okay, thank you.
I think there was one more hand I saw.
Yeah, please go ahead. Please shoot.
I don't know.
Please unmute yourself and speak. Whoever has raised your hand. Some people are trying to speak. I can't hear. Dr. Sharan Singh, would you like to do your intervention now at this stage?
Yeah, I was thinking in case anybody else, because we have quite a lot of people attending this webinar. So I was wondering, and yes, you are right. We are planning to tabulate all these suggestions and send it to the Ministry of Finance. And one of the reasons why we are doing it nearly 3 weeks to 4 weeks ahead of the actual presentation is sort of giving an opportunity so that anybody who has a suggestion we can forward it to the government. So means all the suggestions that have been made by all the speakers, as it is, we are going to send the recording, and we also plan to tabulate and send it to them. So the point that you made, we do have a mechanism of reaching out to them.
The panelists, would you like to add something to whatever you have already said in a cross kind of analysis?
You know, one
please.
suggestion I had, I don't want to know about what is the view of especially some of my friends here. You know, do you think it's the right time to separate debt from monetary management? Maybe that is one suggestion we could pursue, that this is probably the right time to separate debt from monetary management. And the other is that, you know, given the circumstances that evolved after COVID, and probably it impacted the interest rates, impacted growth. Now, government borrowings have been increasing and the interest rates keep rising because government borrowings are high. But this time, the interest rates were high because there's high inflation in the US, and US raised the policy rate, and therefore India raised the policy rate. Now, that certainly must have impacted investment and then growth. So one thought was that the debt management can be made exclusive, and debt management is totally done absolutely in isolation of the interest rate policy, and that the interest rate policy should, or inflation targeting, should be revisited.
Actually, Dr. Charan Singh, I don't agree with you out there, because I think we need to have the same authority, the monetary authority, which looks at both debt as well as monetary policy. I have a feeling, my own sense is that interest rates actually have been repressed in India because you're managing debt. And the government has been able to borrow low because of the fact that it's been fully coordinated by the Reserve Bank of India. So that is a policy which we have taken. A capital scarce economy like India with inflation of 5% cannot actually justify giving home loans at 6.5%, but it's happening.
Yes.
So there is something wrong in the pricing of capital. We are seeing that there is no relationship between the corporate borrowing and the government borrowing. Even if we look at terms of the GSEC rates, I think they are looking much lower today. I don't think the government should be borrowing 10 years at 7%. It should be much higher. But it's been maintained. Liquidity has been managed very well by the RBI to ensure that the rates don't go up. There's always adequate liquidity which is there in the system. Now, if you're going to separate these two functions, just think of a kind of conflict which is going to come through if we have a different authority, one authority looking at monetary policy and the rest of the banking part, and another authority looking in terms of the debt management. So I think things have been very, very smooth now. Now, this is my personal view that we're not pricing it right. Maybe I'm wrong. But everything is going on smoothly today, primarily because of the fact that we have a centralized authority who understands both the markets. You understand the commercial market, and you also understand what's happening to be done with the government debt. So I think that's been organized very well. Look at the calendars which are there. We've never had a situation where we're running in a case of saying that there's no liquidity in the system. So I think a point which was made is that, has the government actually crowded out the private sector? The answer is absolutely no. And even to your question, your issue which you have raised, Dr. Charan Singh, saying that people are not investing because of high interest rates, according to me, is absolutely wrong. There is no demand, that's why I'm not investing. 2010 to 15, we invested heavily, highest rates of interest. Why? Because the economy was booming. So interest is 3% of your total cost. And even today, for example, when you have an EBLR, external benchmark lending rate, the MCLR, which changes every quarter, what is really happening is that my rate is no longer fixed. I remember when I started my career, we would do a return on capital. I know what I was borrowing at 14% remained for 10 years. Today it's not 14%. Today, when the rates come down, it will come down to 8%. Tomorrow, it's 8.5%. It goes up to 9%. So we're living in a totally different kind of a scenario. There is no crowding out of the private sector. Private sector is not investing because there's no opportunity. And I think what Mr. Ajit Pai has mentioned, yes, capacity utilization is improving, but today it's only based in certain sectors. Infra-related sectors are doing it. Now, when we say demand is down, consumerism is down, it's essentially rural demand is down because consumption is not taking place, jobs are not being created. I think somebody had mentioned about jobless growth. Now, that is also, it's not exactly jobless growth, but we're not creating enough jobs. The Swiggy guys are not going to spend money. Construction laborers are not going to spend money. So I think that's the major issue which is there. Therefore, FMCG companies are not investing. Your steel companies are investing, cement companies are investing. We actually track all the quarterly presentations of all the corporates for the last so many years. And everybody is saying we're expecting next quarter to be better. It's become a kind of a rolling kind of thing. HLL is saying that, your Procter & Gamble is saying that we expect rural demand to work out. And again, rural demand doesn't work out. We again say that our sales have slipped. I mean, that's my limited point.
No, it's a very important issue, what you have said. Dr. Saran Singh will probably reply to that. Now, if the issue is increasing the rural demand, for instance, how to increase the income of the people in rural areas? Is it going to be more kind of transfers or something else need to be done? Actually, this is something.
No, actually, I think here we have found a shortcut by doing transfers. We don't want to bring in the farm laws. I don't think it's in the purview of our discussion today. We don't want to commercialize agriculture. There are lots of other forces which are in action, which I don't understand. There's lots of political economy. It's not pure economics. As long as agriculture remains stagnant as what it's today, we'll be in the situation we'll have PM Kisan continuously for the next 30 years. We'll be giving cash, which is required. But I'm not making agriculture commercial. I'm not letting the marketing change. I'm not letting the farmers themselves are happy with MSP. Why is everybody growing rice and wheat? There's no reason to do it. Grow more commercial crops, but everybody is doing it because it's assured. I grow of an average quality. Then we have warped trade policies in agriculture. Suddenly I say you can't export onions, you can't export wheat, you can't export rice. So as far as the farmer is concerned, he says that, look, today's a time when I should be able to export and get higher income. I can't get it. It's totally warped. I think agriculture is totally warped in India.
I think you have a point. More or less, I'm on the same page as you are. Dr. Charan Singh, would you like to?
I think there was some hand raised by Madam Surabhi here. I think I saw she raised a hand. I don't know.
Please, whoever wants to ask a question, please come forward, unmute. Maybe you can,
I think Madam Surabhi
show yourself in a video also.
I am Dr. Matthew Kurian from Mahatma Gandhi University from Kerala.
Okay, so please shoot.
I want to raise two things. So far, we have been discussing much more on the expenditure side of the budget, and we know that inequality is growing in our country. That it has become a center of attraction not only of Indians but all over the world. So I take this as a challenge to the finance minister. Would she show the courage to tax the corporates and the super rich so that the inequality problem can be resolved to some extent? So this is one of the issues which I wanted to bring to your notice. The second one is there is a new phenomenon of educational migration from India to other parts of the world. And so what is happening to our higher education, we have to think. And the allocation to research and such promotion activities, how can it be much more employment oriented? So education, higher education especially as a focus, would the finance minister look into that? Because this is some sort of a brain drain that would have long run worse consequences on the economy. I presume like that. So these are the two aspects which I wanted to bring, and I really enjoyed the discussion. Thank you very much.
Yes, if I know if some panelists would like to respond to this, or before that, maybe for 30 seconds I can take, is that inequality is a much wider issue and important. Maybe higher corporate taxes or taxing the super rich is only one aspect of this. There are other issues also, which I'd like to touch upon in my concluding comments. And the other one is, the one point is also important. I mean, maybe the EGROW Foundation can take up this one. See, now they have only launched the national education policy and it's being implemented in the last 2 years. It's being implemented actually right now. Okay, so to what extent it meets the requirement or it doesn't meet the requirement, I think it's now we can really require necessary to have a threadbare discussion, the way open discussion today as we have on the budget actually, So where it's not necessarily only to praise the policy, rather to look at to what extent it really challenges addresses the challenges facing our higher education.
So, with the permission of the chair, I also had to want to
please.
revisit two topics. So, one is, Madanji talked about that the government is not crowding out the private sector, but I just wanted to understand a little better, why he says that. Because if we have the government spending on EPC projects 100%, rather than the government, than private sector spending portion of that, when you go for EPC rather than PPC and rather than PPP, are we not reducing private sector participation at the cost of government participation? So when you're talking about crowding out, the reference I had was specifically in the EPC to PPP kind of domain in big spending. When the government does it itself, doesn't it exclude the private sector? So one question was that whether he meant something else or he actually has a different view on this. So I wanted to understand that better. The second, which has come up as a recurring theme when people talk about disparity, people talk about, this jobless growth, people talk about, unemployment in India. So this is a very important topic. And, like the chair suggested that EGROW spend time on this, I think it warrants an overall, bigger discussion. But one of the very important things about this topic is we have to see that India's productivity has been extremely low. At 1/5 India's per capita, the global average per capita GDP still, even after improving so much. And a large part of that, as we get more competitive with global economies, will be to continue to improve productivity. And productivity means that per unit person, per unit input, you're actually producing much more. So the kind of labor demands for each unit of incremental growth will actually be much less. So the goal should be to actually accelerate growth much faster rather than slow down that growth by doing a lot of redistribution early on, would be my contention, which is different from the way we have classically responded to it in the past 70 years in India, which is just because the growth is slow, we focus on redistribution rather than accelerating that growth. But it is a topic that I think, as we are getting the PLIs to improve the relative scale of operations, as we are becoming more competitive in our logistics, in our transportation, as we do this and we are able to do more with less units of production, the average factory being 70 workers, where Bangladesh is 1,500 for apparel. Once we do these things, those efficiencies are going to result in less employment per unit growth in the early years. But once we become trade competitive, I think you'll start seeing that improvement take place. 43% of the Indian workforce is engaged in agriculture, and best practices for large economies around the world is only 2% or less, which tells you the massive underemployment that we have in our country. But rather than focus on keeping people employed but underemployed, we actually have to improve the competitiveness and pull people away from agriculture. And for that, in the early phases, we might see faster growth and less job growth in the early phases. But eventually, it will lead to that job growth would be my contention. So I'll stop over there. Thank you.
Okay, thank you.
Just to clarify, Mr. Pai,
Yeah,
I think I was looking at it slightly differently when we talk of crowding out. So as economists, we normally say, how is the private sector crowded out? A, I don't have funds which are available. That's never been the case because RBI is managing it. B, has the cost of borrowing gone up? So normally these are the two factors which I was referring to when we say that the private sector being crowded out. It was not in terms of the project. So let me clarify, we were talking slightly different things. Thanks.
Okay, we had a very interesting discussion. Dr. Saran Singh, do I have a 5 minutes or do we really have to cut out at 5:30?
No, sure, please go ahead. And I think maybe Mr. Raman should take another 2-3 minutes if he wants to add anything. And I was thinking nobody has spoken on inflation targeting. Does it deserve a revisit? Like Madan told me that on debt, separation of debt and monetary management, he has a view, which is a very different view than mine, and that's perfect. And we economists should discuss, debate, and differ if need be. That's perfect. But on inflation targeting and asking a revisit so that the inflation target 4 ± 2 is revised or left like that or done away with, nobody gave a view. I was looking forward to some inputs there. And then,
No,
of
that's an
course,
important issue, but
Last time I can talk on it, but
we can take a minute or two extra.
okay, so my thing is that today we are talking about Monetary Policy Committee and 4% inflation targeting. According to me, 4% was wrong to begin with. Why do I say this? Because at the time when we drew up this charter of MPC saying 4%, if we went back 10 years before that, in 8 out of 10 years, we had inflation above 5%. Fortuitously, the moment we introduced MPC, we saw inflation actually below 4% for 2 years. Subsequently, we have been above that. So I think 4% inflation targeting is a dream because 4% India will never have because food inflation will always continue to be high. We have seen today onions prices have shot up, tomatoes, potatoes, 3 commodities can push up inflation. Food inflation's plus 7%. Your headline inflation comes closer to 5%. So definitely there's need to target it. And the second thing, I think Dr. Charan Singh, which if we are putting it forward from EGROW, let's try and say that, look, the MPC members also should all talk in alignment. If the MPC has a charter saying you have to target only inflation, which is what Dr. Ajit Patel has said when he was the governor, why are committee members saying your target growth is going to get affected? Because growth is not a part of your charter. There's a big contradiction out here. No, now this time we have 2 members of the MPC saying growth is going to get affected, but the charter, which Ajit Patel has said very specifically, we have been told to target inflation. Make it very clear. Otherwise, you say even growth is there, then you could keep having a discussion. This is something which you could take up.
Sir, just to add for inflation targeting, I mean, when we are thinking for revisiting inflation targeting, I believe we should also take into consideration the inflation expectations of household. And if we look at the data that the survey reports us, it has been increasing, and post-COVID that has been increasing across cities because the survey is conducted across cities and it has been showing a increasing path. And as the economic theory says, inflation expectation plays a significant role altogether. So we should revisit. Obviously, this is a question that we should be considering. It's almost 10 years as of now. So again, this has to be revisited. And the question whether it should be 4 ± 2 or whether it has to be increased from that range, that has to be, again, as I said, it has to be revisited based on what inflation expectations of household, given what macroeconomic conditions are prevailing here. So I think it's a time we can think for it as well.
I'm sorry to butt in again. Last, I'll just take half minute. I think what Saakshi is saying is absolutely right. If you look at inflation expectations of households, it's much higher than what we economists say. So in any meeting, economists will say we expect inflation 5%. You look at that continuously every quarter when it's done. I think it's done on a quarterly basis. Households are expecting much higher inflation. So actually, if you bring that factor
so now
into
it's bi-monthly. It's like bi-monthly.
But the number is much higher. It's always in the region of 6%. It's never as low as what we're talking.
Completely. It's a huge gap, actually. It's a huge gap.
I think it's an interesting point. Expectations, obviously.
I'll quickly
household
taking
expectations.
advantage of what Professor Charan Singh asked me. So I'll quickly, just a broader point, trying to make a broader point here. Now I'm again going on the credit side. See, if at all we have to talk about this whole story of financial inclusion, and we are talking of catering to the credit needs of a segment which is
Unbanked.
quote unquote perceived a high risk segment. Now for that segment, to have, there are, what contradictions arise on two fronts. One, if you have to prescribe regulatory norms, especially on the prudential side, which are as stringent as a corporate borrower, then I don't think we are actually hitting the bull. It's like a contradiction here. To expect a borrower, a corporate borrower borrowing 500 crores and a small borrower borrowing at 1 lakh or a 2 lakh rupee to be subject to similar prudential norms is conceptually, I think there is a contradiction here, because the element of flexibility which boils out of the extreme fragility of the borrower's cash flows needs to be somewhere accommodated and not subject to stringent. So what I am hinting at is, when you have a norm of day and stamping of a particular loan as an NPA, and unless he repays 100%, you cannot reclassify him as a standard. That may be fine for a large borrower, but a poor guy whose cash flows can suffer for any time, some element of flexibility needs. That's first point. Second, institutions like NBFCs and others who cater to this segment, they need funding sources outside the bank, because not only one, the concerns which regulator has over the contagion risk, or over the interconnectedness which will lead to issues, there has to be some direct element of fund sources provided. Intervention done at the government level is required. We suggested it could be something else also.
Yes, I think you earlier also mentioned this. And secondly, you have also in your speech outlined how actually NBFCs are treated in the more difficult situations. I think that is something, some corrections are really required. With this, I think...
Hello.
Yeah. Yeah, please. Who's that? Please unmute and speak. Can't hear you. Shall I go to my concluding comments, Dr. Saran Singh?
Sure.
Yeah. So I think we had a very, very rich and rich and very wide coverage of topics, starting from expenditure on health and education, women, etc., to NBFCs and fiscal deficits and all sorts of kind of topics. And obviously a budget, we are expecting a lot of things, and people are actually now talking about going back to the normal economic situation, coming out completely from what we had to do. We had to take a detour because of COVID, pandemic and so on and so forth. In my concluding comments, I'd like to go slightly beyond the budget, actually, since the government has got a mandate for another next 5 years. I'd like to talk about a few, a couple of, rather, not a few, couple of slightly longer term issues, which I believe has relevance to whatever we have discussed today. First of all, we are talking about expenditure on education, health, and so on and so forth. But equally important, we have seen, is the issue of the efficiency of the government expenditure. All right. So this we all talk about, but how really the efficiency is brought about? I think EGROW Foundation had a wonderful lecture on that from Kartik Muralidharan, who has come up with an interesting book and has many suggestions. I think this is something which can form the basis of discussion for how to improve the efficiency of public delivery of public services, and that will be, improving delivery of public services, which will lead to improve in the quality of public expenditure. Now, this is extremely important in the context of improving productivity and so on and so forth. You see, and equality you have mentioned. So go to talk about healthcare, talk about education. There is a great deal of inequality because of less than desirable service, quality of the service of public, the basic services by the public authority. So poor, and they cannot basically avail these services, but then their quality is bad. So they are sometimes forced to spend higher amount of amount seeking for private sector. That actually leads to further accentuation of poverty, vulnerability, and so on and so forth. All right, so this is something I think we really need to talk about how to improve the, how to have an incentive for public servants to deliver. So those are some of the things I think we need to have a discussion. We haven't had enough discussion in the nation. Now, apart from that, the government also talks about reforms. I think many reforms which India has been doing since 1991, there are some hard reforms which are quite left and which are also extremely important to be taken forward now that they have a 5-year tenure, next 5-year tenure. One of the areas of reforms is the factor market reform. This includes reforms in agriculture, reform is basically land, labor, and also capital. This has been mentioned. NBFC has been covered. Labor market reforms, we are trying to introduce hurriedly in the COVID period, but that was not very satisfactory. Land market reforms, are actually going on and on, but they are also in a limbo now. So these are some of the things which we really need to look into. Somebody mentioned farm sectors. I think, and I have written earlier also, all the farm bills were very much, required. These are very timely and so on and so forth. But still the government could not implement it and they had to withdraw it. The reason is that, passing the bill in a parliament is not the end of the reforms. Reforms have to be implemented in the ground. So they need to be, before passing the acts and after doing it also, they need to be very extensively discussed within and outside the parliament. Stakeholders need to be taken into account. I think we should move the way we have done with GST earlier, taking a long time, and these reforms are very, very badly required. Unless these are done, real economy is not going to, going to change, and we need to really bring about that. So one of the speakers have mentioned this. This is something very, very important. Jobs in that case can be created, income can happen there. And in any case, now jobs are also likely to be new jobs may also be difficult because of coming of artificial intelligence and all. So we need to really think about these issues also, and which are slightly longer term than, that can be taken up in a particular budget. So maybe EGROW Foundation will take some of the issues, particularly 2 issues I mentioned earlier while discussing regarding whether the new education policy have been able to take up the challenges of higher education today, or NBFCs, in fact, and credit to the unbanked sector is also extremely important. So these are some of the issues I think which can be taken by this. We expect this government, which has a mandate to rule for another 5 years, to initiate. And actually, I would like to just add one more thing here, is that we need to have certain bipartisan political consensus on certain issues like farm issues, and otherwise it's going to be, if we play politics with these things, on which actually the long run fortune of the country are linked to, if we don't have a minimum amount of consensus on those kind of issues, it will be difficult to take those reforms forward, and as a result of which the country is going to suffer. So if we have to turn out as a developed nation by 2047, not only we need to sustain our growth, capital expenditure and whatever not, but we need to actually improve the delivery of public services so that no Indians are left out of the basic services of education and health. And education, as we all know, is becoming increasingly more important, not only just to get a job, but also to cope with the modern way of life. Also, you need to have certain minimum amount of education. So I'd like to not continue any further. I'd hand over the forum to Dr. Charan Singh for his final rounding up.
Thank you very much, Professor. And thank you very much, the panelists. Each one of you has contributed significantly, as well as the participants. I'm especially thankful to Mr. Ajit Pai. He is in London, but he said, I've come here for a meeting, but I will spare time to be with you on this panel. So I'm really thankful to you, to Ajit, for sparing time. I don't know where you are right now in London, but you have kindly kept your word and been with us. So thank you so much. As I mentioned, this presentation will be available on our website tomorrow. I'm obviously going to send it to MOF. I'm also going to prepare a small write-up out of it. So if you want to send me your points, just bullet points, I'll be happy to ease my preparation of the write-up. And I want to circulate it to the authorities so that these inputs are captured. Also thankful to participant Mr. Suhas Chand Agarwal. I think the point that he's making on the rural and the Gaushala, I think is a very important point, and thanks for bringing it up. I, in my wildest dream, would not have thought of it. So that's very good that you've participated and brought these points to our knowledge. So in a nutshell, thank you, each one of you, to have brought this issue. Very wide spectrum, as Professor Bezbaruah summarized it, but all very pertinent. So thanks for that. Next week, we are embarking on a new series, and that is on understanding the state growth. So next 5, and of course, it's not going to be in continuum. There are other which are scheduled and we could not change. So we will have on some days, but over the next 3 months, we will have on state governments understanding what happened. It's a case study. How did Punjab deteriorate so rapidly? And so we are dedicating 5 Fridays to Punjab, not consecutively, but 5 Fridays to Punjab. We are taking each one of them separately: agriculture, MSME, industry, services, and overall. And then we are taking 5 states, again, not consecutively. We are taking 5 states and looking at what is that they did, that they shot up the ranking while Punjab went tumbling down the ranking. Next week, on July 5, we have Punjab and agriculture. We have 4 professors, and they are from different universities, but the focus is on Punjab agriculture. So I would invite you, 4 to 5:30, we will have another discussion on Punjab. As far as the topics that have been raised today, I'll consult both Madan, Professor Bezbaruah, and Professor Saakshi. We will probably have separate 90-minute webinars dedicated to these topics that you have mentioned. And then we will look at them separately. Debt management separation we can take up. Interest rate borrowings. Can the government really borrow at 6.5%? Is that the right rate, or are the interest rates suppressed? We'll look that up. Debt management we'll look up. So all the issues that have been raised, I think we'll pick up in separate webinars, but that will most probably happen because we are booked till, I think, middle of September. So we'll take them up sometimes later. So with that, let me thank each one of you once again. Thank you, Professor Bezbaruah, for chairing the session, and then looking forward to your participation next week on Punjab. If you have time, once again, to write me the bullet points, it'll ease my job, and then I want to circulate it at the earliest. I'm going to put it on Twitter too, so you're welcome to participate on Twitter and make your points yourself. That'll also reach where we want it to reach. Thanks again. Great weekend. Delhi is beautiful after a hot, burning, scorching summer. It has had the heaviest rainfall, I'm told, in 90 years. The roads are flooded. Traffic is fully jammed.
And now Delhi is
And
flooding
Weather
actually.
is beautiful. Huh?
Delhi is flooding now actually.
Yeah, but the
It was
weather is
earlier
beautiful.
flooding with heat waves, now it is flooding with water all over.
I think the prayers have been heard. The hunger strike has reached the God. If Haryana can't give water, at least the clouds can. So Delhi has been blessed. All
Yes.
right. Have a great time.
Thank you.
See you
Thank you,
next
sir.
week.
Thank you,
Thank you.
everyone. Thank you so much.
Thank you.
Thank you, everyone. Thank you.
Thank you.
Thanks to everyone.